On December 20th, 2025, Nigeria made an announcement that drew significant attention from the international energy sector. The country stated it would no longer accept only US dollars for its crude oil sales, ending a long-standing practice in the global oil trade. Nigeria's oil transactions will now be settled in a range of currencies, including the Chinese yuan and the Indian rupee. The country also introduced a Pan-African digital currency, intended to encourage economic integration within Africa and reduce reliance on Western financial systems. This development presents a direct alternative to the petrodollar system, which has supported the US dollar's role in global finance for decades, and raises questions about the future of dollar dominance. According to Nigerian officials, the decision is intended to promote economic sovereignty, reduce exposure to US monetary policy, and strengthen partnerships with Asian economies and other African nations. The announcement led to immediate market adjustments. Oil prices increased and currency values shifted as market participants evaluated the potential long-term effects on global trade and investment. Globally, governments, investors, and energy companies are observing the situation to determine whether Nigeria's move will remain unique or encourage other emerging economies to diversify away from the dollar in international trade. This decision may prompt other oil-producing nations to consider similar actions, which could influence the structure of global energy markets. The United States is now evaluating its response to this shift and the implications for the petrodollar system. The petrodollar system, established in the 1970s, fundamentally changed the way the world buys and sells oil. Under this system, countries are required to use US dollars to purchase oil, regardless of where they are or who they're buying from. This arrangement was born out of deals between the US and major oil producers, especially in the Middle East, and it has shaped global finance for decades. As a result, there's a constant, almost insatiable global demand for the US dollar. Every nation needs dollars to keep their economies running, fueling a cycle where dollars flow through banks, businesses, and governments worldwide. This exorbitant privilege allows the United States to borrow money at lower costs, run persistent trade deficits, and finance its government debt more easily than any other country. The dollar's dominance underpins America's economic and political influence, giving it unique leverage over the global financial system. Now, Nigeria's decision to break from this system is a significant challenge to that privilege. As Africa's largest oil producer, Nigeria's move could inspire other nations to reconsider their reliance on the dollar for oil transactions. If more countries follow Nigeria's lead, the global demand for dollars could drop sharply. This would likely result in higher inflation and borrowing costs in the US, and could weaken the dollar's value, shaking the foundations of the current financial order. The dollar's dominance also gives the US the power to impose sanctions and control access to the global financial system. By creating alternatives, Nigeria is helping to build a new financial infrastructure, one that is less vulnerable to American pressure and more open to diverse partnerships. This shift is about much more than just currency. It's about who gets to set the rules of the global economy, and who holds the power to shape the future of international trade and finance. By establishing a non-dollar channel for oil sales, Nigeria is taking a bold step toward a more multipolar financial world. One where economic power is more evenly distributed and new alliances can form. The world is watching closely. Nigeria's move could mark the beginning of a new era in international finance, with ripple effects that reach far beyond oil and currency markets. Nigeria's de-dollarization is a calculated strategy for economic sovereignty. Tired of US monetary policy dictating its fate, Nigeria wants control over its own economy. China and India are now Nigeria's biggest oil customers, so trading in their currencies makes sense, cutting costs and risks. New digital payment systems, like Nigeria's Naira and China's CIPS, make bypassing the dollar easier than ever. This move also asserts Nigeria's leadership in Africa and signals a break from post-colonial economic structures. It's a pragmatic adaptation to shifting global power, aligning Nigeria with rising Asian economies. By embracing a multi-currency system, Nigeria is betting on a decentralized, digital future for global finance. The message: Nigeria wants a bigger voice in a more equitable world order. Washington's response was swift. warning of instability and pressuring Nigeria to reverse course. U.S. officials threatened sanctions, including freezing assets and restricting access to American financial markets. The U.S. can also leverage its influence in the IMF and World Bank to complicate Nigeria's access to loans and aid. Regulatory investigations into Nigerian banks operating in the U.S. could add further pressure. This is classic U.S. economic statecraft, using the dollar's centrality as leverage. But aggressive tactics risk backfiring, pushing other nations to seek alternatives and accelerating de-dollarization. The U.S. must balance defending the dollar's primacy with avoiding the appearance of bullying. Overreach could unite other countries behind Nigeria, undermining American influence. The world is watching how far Washington will go to protect its economic power. History shows that global power and currency dominance go hand in hand. The British pound once ruled, then gave way to the dollar after World War II. Before that, it was the Dutch guilder. These transitions were gradual, reflecting shifts in economic and military might. The dollar's dominance is deeply entrenched, but Nigeria's challenge is part of a broader push for a multipolar currency system. Unlike past transitions, today's challenge isn't from a single rival, but from many countries seeking alternatives. Nigeria isn't replacing the dollar with the yuan, but using a basket of currencies, reflecting a more diffuse global power structure. The goal isn't a new hegemon, but an end to the era of a single dominant currency. This marks a fundamental shift in the architecture of the global order. In Nigeria, the move away from the dollar has sparked national pride and a sense of economic liberation. Many see it as a break from neo-colonial dependence and a bold step toward true sovereignty. Editorials hail the policy as overdue, positioning Nigeria as a leader for Africa's future. Critics worry about short-term risks and U.S. retaliation, but most Nigerians support the government's vision. The policy is seen as part of a broader push to diversify the economy and unlock Nigeria's potential. For many, the long-term benefits of independence outweigh the risks of challenging a superpower. The move has become a rallying point for national renewal and self-determination. Globally, reactions to Nigeria's move are split. China and India welcome the shift, seeing it as a win for multipolarity and their own currencies. Europe is cautious, publicly concerned about instability, but privately interested in alternatives to dollar dominance. In the global south, Nigeria's action is admired as a blueprint for resisting U.S. financial pressure. Russia and Iran praise the move as a stand against financial colonialism. Key oil producers like Saudi Arabia remain silent, watching closely to see if Nigeria can withstand U.S. pressure. If Nigeria succeeds, others may follow, potentially triggering a domino effect in global trade. The outcome will shape the future of international finance and alliances. Nigeria's recent challenge to the dominance of the US dollar forces a hard and necessary look at the future of American financial power and global influence. This move is not just a local event, it's a signal that the world is beginning to question the dollar's supremacy in international trade and finance. The dollar's reign, however, won't end overnight. It remains firmly backed by the world's largest, most dynamic economy, and is still the preferred reserve currency for central banks and investors worldwide. Its deep financial markets and the trust built over decades continue to provide stability. But Nigeria's move is a clear signal that the era of the dollar's uncontested monopoly is drawing to a close. Other nations are watching closely, and some are already exploring alternatives to reduce their dependence on the greenback. The future is likely to be a multipolar currency world, where the dollar remains first among equals, but must share influence with the euro, yuan, and other rising currencies. This shift will reshape the global financial landscape. As this transition unfolds, U.S. sanctions will lose some of their bite, and borrowing costs for the government may rise. These changes will force American leaders to make tough choices about spending priorities and foreign policy commitments. The United States now faces a crossroads. It can try to resist these changes through coercion and pressure, or it can adapt by strengthening its own economic fundamentals and building stronger alliances with both old and new partners. Aggressive resistance, however, risks alienating key allies and could even accelerate the global shift away from the dollar, making de-dollarization a self-fulfilling prophecy. True adaptation means accepting a new leadership role in a more balanced and interconnected global system, where cooperation and flexibility are just as important as economic strength. Navigating this transition will require not just economic reforms, but also political will, strategic foresight, and a willingness to engage with a rapidly changing world. The era of effortless American financial dominance is ending. What comes next will be determined by the choices the United States makes today, choices that will shape its influence for generations to come. Nigeria's de-dollarization is more than a payment policy. It's a symbol of a changing world order. The rise of China, India, and the global south is reshaping global power. A multipolar currency system could bring more stability and fairness, reducing vulnerability to any one nation's policies. For the US, this is a moment for reflection, not panic. Its strengths remain formidable. The challenge is to shift from dominance to partnership, and from coercion to cooperation. Nigeria's story marks the end of one era and the start of another, one defined by complexity, diversity, and negotiation. The task for all nations is to navigate this transition peacefully, building a just and stable global system.